What's going on, guys? Shaz, loan officer, back here with another video. Today I wanted to discuss a home equity line of credit. Okay, so I've been in the consumer lending for some years now, and this has been one of the strongest financial tools that I've been able to help people with. Right now, with inflation, with the job market, and all the other issues that can come up in life, people are starting to really struggle with debt. Debt has just continued to increase on the consumer front. And HELOCs have been ways people have been able to pay down their debt and get things back under control. So I wanted to just discuss what a HELOC is today. HELOC is an acronym for Home Equity Line of Credit. Okay, so you have equity in your property, you've been paying it, value of the property has been increasing. So what happens is you can tap into that equity with a home equity line of credit or a HELOC. Generally speaking, for example, if your property is worth $500,000 and you're doing a HELOC at 80% CLTV or collateral loan to value, that's $400,000, 80% of 500. Subtract that by your mortgage balance. That's roughly what a line of credit you may be able to use. So a lot of use cases for the HELOC are home renovations, and then again, as I was discussing, debt consolidation. If you are going to look at doing the debt consolidation option, be sure that you have a budget. Make sure you have everything under control, because once you go down the HELOC route, the HELOC is going to put a lien on your property. So whichever institution you go with will put a lien on your property. The good thing with the HELOC versus a cash out refi is that the HELOC does not touch your first mortgage. So mortgage is always in the first position. And a lot of people, if you were lucky in 21, 22, when the rates were really low, people were able to refi their mortgages down to 2-3%. So you definitely do not want to touch those and enjoy those as long as you can. And of course, a cash out refi, you would be refinancing that first mortgage to whatever the mortgage rates are today. So a big benefit there. A HELOC is also a revolving line of credit. So it's like a large credit card that is using the equity of your property. Okay, so as you draw on it and you pay that balance down, that balance becomes available for you again. So again, you can see how this could be very useful for home renovations. And I honestly, tell people to have it as a safety net too, because you never know when you're going to need things. Things are breaking in homes all the time, right? So it's good to be prepared. Good to not have to cash out any investments. Good not to touch your rainy day funds or run into savings. So it's, this is just an alternative that you can use if need be. And right now with HELOCs, a lot of institutions are offering some fantastic discounted promo rates. So rates as low as 3.99, 4.99% for a set period of time. That could be 6 months to a year. As far as what promos I've seen from there, they do go to, generally speaking, a standard variable rate, which are usually indexed to the Wall Street Journal Prime, which is at 8% as of today. As of this video, November 2nd of 2024. Time is flying. Whoa. And then generally places have margins. Okay. I've seen margins of a quarter point. There's been margins in the past at negative. Not sure if that's going to be coming back anytime soon, but things that you can look for. Okay. It's going to be determined on your credit score, obviously, and how much of that equity you're going to be tapping into. Lots of institutions are offering no closing costs for HELOCs up to $250,000. So again, a low-cost option to get a great rate financing or financial tool in the HELOC. There would be no origination fees. Make sure the ones that you go with, if you do go with the HELOC, have no prepayment penalties, no minimum draws. So this is something that I've been seeing. Institutions will give you a HELOC, for example, $100,000, and then they will require you to take like $10,000 or $20,000 out. But if you're doing a home renovation or if you're keeping it as a safety net, that could be a deterrent or a con. So make sure you're looking for a HELOC program that fits your needs. And that's kind of the big thing, right? The HELOC is this flexible tool The cash out refi may be able to give you better interest rates over time since it's a mortgage product. But if you're in those better rates, doesn't make sense. If you don't need the funds lump sum, doesn't make sense because the HELOC is going to give you more flexibility. And again, no closing costs. Cash out refis will have closing costs. So think about it long term, think about it short term for costs, and find what makes most sense for you. Again, guys, I am a loan officer. I really do enjoy helping people with their financial decisions and their journeys. So whatever questions you guys have, if it's regarding HELOCs or something that you like me to cover, okay, I'd be more than happy to. Thank you. If you found this information useful, please subscribe, share it with your friends and family, and I'll see you in the next one. Take care.